What's going on, everyone? It's Paul, the 920 trader with 920 Trading and Trading Decoded. Today is Tuesday, December 17th, 2024. It's the day before CPI day, folks. Thought I'd jump on here and do a little video and talk about some demand zone trading again. But before we get going, folks, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is a couple of times a week and on the weekends. So on the weekends, folks, you don't want to miss those videos. On the weekends, those correspond directly with my weekly newsletter, which you can find over on my website. But again, folks, leave us a comment. We always appreciate the comments. I respond to each and every one of those comments, folks. It's me. It's not a bot. It's not anybody else, folks. And don't forget to share with your friends, neighbors, trading community, all of the good folks, all the good people. Just share it, folks. Just share it. We would appreciate it. Let's look at pre-market high. We got pre-market high sitting up here at 605.62. We have pre-market low sitting down here at 604.02. Now, also, what am I looking for down here? Let me get to I'll get to the 30-minute chart and show you exactly what I'm looking at. Again, this is what I'm looking at down here, folks. So I've got this zone right in here at 604.12. And then I've got this after hours. But if you trade long enough, you realize that your regular trading hours, demand zones and supply zones, they work much better than pre-market or after hours. So I'm going to pay close attention to 602.90. As a matter of fact, we will see how 602.90 kind of played out today in the big scheme of things. But again, folks, this is a beautiful demand zone. Again, 30-minute double bottom, demand zone left over from Friday. So this is Friday of last week. Great trading day last Friday. Not really. But anyway, if we move a little bit further left, what do we have? We have to go back to December 3rd. So look at all this information. Look at all this right here. December 3rd. So 402.48. Now, there was a day last week, I think it was either Tuesday or Wednesday, where we came down and we touched that level. Let's see when that was. Yep, here it is right in here. So it was last Tuesday, and I remember this play very well. Actually, that zone, I remember that zone. But anyway, it ran up. So again, folks, we have demand zones down low, 30-minute double bottoms. That's what I use for demand zones. You can use a 15, you can use a 5, whatever you want. But just remember this, folks, the higher the time frame, the stronger the level. That's why I use 30 minutes. I could go up to 1 hour or 4 hours, but since the market tends to work, pardon me, in 30-minute slices, why use anything for your demand zones other than a 30-minute? Every now and again, I'll look at the 4 hour, but that's about it. But let's get into the trading day, folks. Begin. Here we go. Well, what do we have here? And again, I'm gonna show a lot. I'm gonna show how these things played out. I'm not going to kind of hide my hand. You guys can see exactly where I got in and the why behind getting into this play right here today. POC, I don't remember where POC is. POC right now, 604.13. I think POC was a little bit below this, but you see these plays all the time. You can see my play right in here. I had this essentially a cross back to the upside. It was still below VWAP, but I was thinking, we're going to get one of those skinny sticks. And one of those skinny sticks is going to, and again, it was out of pre-market low. So we got that push down, recapture, back to the upside. And again, right here at view up. And I was thinking, you know what? I knew I had thin volume above 606.06 up here. So if we got into that thin volume and moved, I didn't want to miss a skinny stick back to the upside. So I didn't. So I took this play. And I told my group, I said, hey, I'm getting ready to get into calls right here. But keep a close eye on it because there's always the possibility that obviously we move down. So I had 603.88. So 603.88, that's essentially where we stopped earlier. And I got so close to stopping out. I mean, look at this. I mean, it was so close right down in here. And eventually it just pushed up. Now, at this point, I thought we were going to take out pre-market high, and you might be asking yourself, and again, you can look left in pre-market. I pay attention to pre-market a little bit, but not as much as some other people, and that's fine. It's just the way kind of I trade. Now you can say to yourself, why didn't you close out the trade right in here? Well, I didn't close it out because again, I thought we'd be able to get a little volume behind the push and push it up. It didn't happen. So as this was moving against me, I closed out the trade. It's a decent little winner here. And so consequently, the result of that is I didn't catch the double cross to the downside. But look at it. It ran down. It was a nice move back to the downside. Didn't hit any of these levels. And again, remember that 602.90, a massive, massive, massive demand zone. Now, this play right here, once we came up, kind of made this little cup over here. I told the group because we had the POC sitting on top of the VWAP at this time, and I told the group because again I wasn't in down here because I didn't hit my demand zone. I wasn't in, and I said, okay, folks, if we get a close, and I think the POC was right in here. I said if we get a close above the 9. We're already above the 9. If we get a close above the POC, VWAP, and 604.02, so 604.02 again, pre-market low. Let's go ahead and see if we can take calls back to the upside. And sure enough, we got that close up there. And I told the folks, I said, okay, I'm going in calls. And I told them before I was going in, I told them exactly what I was going to do. Before I did it, I wanted them to be able to anticipate what I was looking at. And guess what? It doesn't always work out, folks. It doesn't always work out. So I took this. And again, I was looking for the same thing. We got this push higher. And I thought we were going to go take out that pre-market high, but we didn't. So what did I do? I waited to close until I had a candle that went against my position inside the 9. So there was that. So we came down, touched, and again, I think POC was just a little bit lower. So POC's here right now. I don't think we touched it. But again, we got this move back to the upside. When we are in an uptrending day, I'm going to take the double cross. I'm going to take the double cross because we did a couple of things. Number one, it's a double cross. So we opened below the 9, closed above the 20. And we kind of got rid of this structure that we were looking at over on the left. And that was basically at 54. So 604.54. We got to close above that. And then it ran. And at this point, I was thinking, you know what? I don't really know if we're going to go get that pre-market high at that point. But, kind of took it when I saw that we were losing strength up here. Decent little play. But then look what it did, folks. Look what it did. I mean, we had a cross to the downside, another cross to the downside. It moved, and then look what it did in here, folks. Look at this. Look at this beautiful play. Back to the downside. Moves. Okay, so this is what I was talking about earlier, folks. Look at this move again. Directly into this demand zone. This is the demand zone that I was looking for all day. I could have been a little bit more aggressive and taken it directly out of this demand zone, but I said, you know what? I want some 9 protection, a little bit of 20 protection. So I got this cross right in here and took it up to VWAP. It's late in the day at this point. There's 20 minutes left in the trading day. And again, we'll go back to that 30-minute and take a look at that. Right out of this demand zone. So again, right in here, folks, right in here. Again, this demand zone, and it's left over from Friday. So again, folks, the higher the time frame, the stronger the level. But again, it just ran up. This was, there were other good plays. I mean, there are other good plays. This was a good play to the upside, a couple of really good plays. But once we got into, look at how it reacted out of this demand zone. And again, it's a demand zone for a reason, folks. That's why we say take your plays out of major zones and major areas only. That's when you should be putting on those plays. There are people out there that would say, why in the world would you want to or consider taking calls when you are downtrending on the day? And to those people, I say, well, it's a demand zone. So it's all just price action, folks. I mean, look what it did in the past. Look what it did on the 30-minute before then. Now, generally speaking, if you're between zones, if you're between, 2 big zones and we're downtrending and you get this sort of price action, leave it alone. Wait till you get to that higher time frame demand zone like this. But it ran up. And my goal at this point was VWAP. So you had a nice little run, 15 to close to $1. What's 85 cents or 90 cents, somewhere right around in there. And then it just ran 350. Haven't played 350 in a while, but look at 350. We got a lot of volume, and we pushed up again, and we kind of call it a 6-bar, 7-bar play, whatever you want to call it. POC was not here, I don't believe, at this time. We got to move to the upside. It was, in my opinion, if you weren't already in that trade, you don't want to take that trade. Only because it can move against you pretty quickly, and particularly since tomorrow is FOMC day. But anyway, if you have a cross at 350, take the cross at 350. But other than that, make sure your edge presents itself. But that's how she played out. That's all I really wanted to show you today, folks, is that demand zone. So 30-minute demand zones or 30-minute demand zones are double bottoms, 30-minute double bottoms. 30-minute supply zones are double tops. And price action tends to move between major levels. That's just the reality. The higher the time frame, the stronger the level. And I'm going to show you this one more time. Again, I was looking for this level. Now, had we pushed down, I'm looking for other levels down below. So if we get down below those levels, guess what? This is kind of off the table, and we wait for this next demand zone to hit and then take the play. But we're stacking probabilities in our favor, folks. We're absolutely stacking probabilities. Now, you're going to look at this play right here and say, why did you not wait to breach all of this structure in here before you got into the play? My answer is very, very simple. Two things. Number one, when you are coming out of a strong demand zone like we came out of earlier today, structure doesn't mean anything. We're not worried about structure coming out of those zones. When you're following a trend, like it's an uptrending day or a downtrending day, you take your double cross and then don't worry about structure. The only time you worry about structure is when you are counter trend trading something and you're looking for something that tells you that the play is going to move a little bit further in your direction. So in other words, you want to breach specific levels of structure, if you will. And you can look at the 5-minute, and the 5-minute will tell you a lot. Again, when you're trying to break structure. But look at this move back to the downside, and then how fast it moved to the upside. We love those plays coming out of those big demand zones down low and big supply zones up top. But folks, that's how she played out today. That's how she. It was a really, really good day. Irrespective of how I did today, folks, I wanted to show this demand zone because if you could just stack the probabilities in your favor and take plays out of demand zones and supply zones or higher time frames, kind of get rid of the randomness. There's so much randomness in the market. That's why most people lose in the market, because they trade random trades. They're like, oh, this looks like a good place to put on a trade, or this or this. There's no rhyme or reason as to why they got into a trade. Have a reason to get into a trade. And the biggest reason are going to be higher time frame zones, folks. Demand zones down low, supply zones up top. But anyway, that's how she played out today. So again, folks, if you like our videos, please go ahead and like them and subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is a couple times a week and on the weekends. Also, don't forget to share, leave us a comment, all that kind of good stuff, folks. Now, this is where the rubber meets the road. If you are interested, and I know you are, why would you not be interested in live daily trading? If you're interested, again, I know you are, in live daily trading, head on over to our live trading Discord. It's called Trading Decoded. The link for that is down below. We are so convinced that you will find a tremendous amount of value in what we do. We're going to give you that first week for free. And you know what we do all day in our group? We talk about these trades, folks. We talk about these trades. I talk people through trades all day long. Period. I tell people what I'm seeing all day long. If you're in calls, this is what I'm looking at. If you're in puts, this is what I'm looking at. And when I'm in a trade, I'm talking the people through the trade. I'm also talking myself through the trade. So irrespective of whether I'm in the trade or not, I'm talking through trades all day long, folks. But again, hit that link down below. Join. It's a free week. What do you have to lose? Nothing. Let's make you better, and we know you can. Again, Trading Decoded, the link for that is down below. Now, if you are interested in the 920 crossover strategy, head on over to 920trading.com. Where else, folks? And then guess what? There's nothing to buy. There's no charge. There's no hidden anything like that. It's all there for the entire world to see, folks. And again, what do you have to lose? It's all there for the world to see at no charge for you, or no charge to you, other than a little bit of your time. Are you willing, or are you not willing to invest in yourself a little bit of your time? The most precious commodity. Again, 920trading.com. Head on over there. The entire strategy is there. Now, while you're there, sign up for the free weekly newsletter. Comes out every Saturday at 11 o'clock Eastern Time, along with a video that talks specifically about the newsletter. So you get the newsletter, you get the video, can life get any better? I submit that it cannot. But anyway, folks, that's how we did it today. I hope everybody had a great day today. But you know what? I say this all the time. Above all else, whether you made money today, lost money today, or didn't trade today, I hope you followed your trading plan today, folks. That is the most important part, is following your trading plan. Now, this weekend, the newsletter is going to be on, the newsletter and the video is going to be on a day in the life of a full-time retail trader. It's going to be literally about what I do from the moment that I get up until the moment that I go to bed. It's going to be, hopefully you'll find a lot of value in that as well. But anyway, folks, I hope everybody has a great rest of the day. We'll probably do another video at some point this week, probably tomorrow. Tomorrow's FOMC. Tomorrow's FOMC, so we're going to expect a lot of volatility, in the market. That's fine. We like volatility, folks. We don't mind it at all. But anyway, folks, I hope everybody has a great rest of the day. So until next time, have a great rest of the day. And we will see you in the markets.